Welcome. In this video, we will XCN coin price fall from here. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
When we carefully examine the chart, it is possible to observe that price movements have been following a certain trend for quite some time, with successive lower highs over the period. This pattern is defined in technical analysis as a descending trend line, or in other words, a bearish trend. Especially when the market forms lower peaks with every upward attempt, it shows that sellers are still dominant and buyers are unable to gain control. In such periods, trendlines serve not only as a visual guide, but also as a psychological barrier. This is because the majority of investors use the trendline as a reference point and tend to make significant decisions when the price approaches this level. The current structure in front of us indicates that the long-standing downtrend is being retested. The price has once again reached this trend line, which it has touched multiple times in the past. These touches are very important in technical analysis, as each contact point demonstrates the strength of the supply and demand battle at that level. If the price pulls back after touching the trend line again, it shows that sellers are still in control. However, if the trend line is broken, it suggests that the sellers are losing power and buyers may be taking over. So why is breaking this trend line so important? Because trendlines are among the primary indicators that determine the market direction and shape investors' decisions. Especially in long-term downtrends, a consistently negative sentiment dominates the market. This sentiment is reinforced not only by technical signals, but also by investor psychology. People fear falling prices, hesitate to invest, and every attempt at an upward movement is suppressed by the expectation of another drop. Therefore, a descending trend line acts not only as a technical resistance, but also as a psychological obstacle. However, every trend eventually comes to an end. Declines cannot last forever. At some point, either the selling pressure decreases or new expectations emerge in the market, creating the groundwork for a breakout to the upside. Particularly if such trend lines have been tested multiple times and the price approaches it more strongly each time, it indicates an increasing likelihood of a breakout. In technical analysis, repeated tests of a level often signal that the trend line is weakening and may soon be surpassed. This is an important clue. If the trend line is broken, a significant technical relief will occur, because such a breakout not only signals the end of the current downtrend, but also suggests that a new upward trend could begin. These types of breakouts are often referred to as trend reversals, and many investors wait to catch this reversal. Especially when these breakouts are supported by high volume and increasing momentum, it is possible for the price to climb to much higher levels rapidly. After such breakouts, another important factor that investors focus on is the pullback phase. If the price breaks above the trend line and then returns to test it as support and responds with a strong upward reaction, this confirms the permanence of the trend reversal. This is considered a very strong buy signal in technical analysis. In this case, the former resistance level has now turned into support, and buyers are establishing stronger positions at that point. Additionally, the break of descending trend lines creates a significant shift in investor psychology. Investors who previously stayed out of the market due to falling prices begin to act more boldly after such a breakout. Especially those who suffered losses in previous declines or missed out on the early stages of the rally viewed this breakout as a new opportunity and enter the market. This increases demand and pushes the price higher even faster. Thus, the breakout triggers not just a technical shift, but also an emotional and psychological transformation. Institutional investors and algorithmic systems also closely monitor these types of trendline breakouts. These points are strategic zones where large funds shift or open new positions. When signs emerge that a long-term trend has come to an end, major capital takes advantage of the opportunity, which leads to a significant increase in trading volume. This, in turn, helps the new trend develop more quickly and steadily. In conclusion, the price once again touching the descending trend line in the current setup indicates a highly critical level. The developments that follow this contact will determine the medium and long-term direction of the price. If a new wave of selling follows from this level, the downtrend may continue for a while longer. However, if the price manages to break above this level and the move is supported by high volume, a new upward trend may begin. This technical structure points to a period full of opportunities for investors. For those who are patient and observant, this trendline could represent the end of one era and the beginning of another. Therefore, price movements at this level should be closely monitored by anyone practicing technical analysis, and strategies should be developed accordingly. But we cannot rely solely on trend lines for our analysis. Let's take a look at other metrics as well. Stay tuned.
As a result of careful observations on the chart, it is clearly seen that price movements have been gradually tightening over time and moving within a narrowing downward structure at a certain angle. This type of structure is known in technical analysis literature as a falling wedge pattern, which is considered quite significant and is closely followed by investors. This pattern typically appears toward the end of a trend and is a form of consolidation where prices make lower highs and lower lows in a tightening range. Visually, it resembles a symmetrical triangle, but the key difference is that both the support and resistance lines slope downward. Although the price appears to be moving downward, the core characteristic of this formation is that it tends to break to the upside more often. In the current situation, following a long-term downtrend, the price has started to consolidate within a specific channel. The upper line of this channel is a descending resistance line connecting each lower high, while the lower line is a support line connecting lower lows. These two lines are converging, and the price is oscillating within this increasingly narrow area. From a technical analysis perspective, these structures are key signals that the market is at a decision point, gathering energy, and will likely make a directional breakout soon. Falling wedge formations inherently create a sense of indecision and waiting among investors. On one hand, the ongoing price decline gives the impression that the downtrend will continue. On the other hand, the increasingly tight consolidation suggests that a change may be near. Breakouts from these types of structures are often sudden and accompanied by high volume because the market has been undecided for a long time, and when the breakout occurs, pending buy or sell orders are triggered all at once, causing sharp price movements. In the current chart structure, it is clearly seen that this wedge is narrowing and the price is approaching the end of the consolidation zone. Technically, this is a very strong indication that a breakout is imminent. However, the direction of the breakout is not yet certain. It's unclear whether the price will break this narrowing pattern to the upside or downside. In such cases, it is a strategic approach for investors to closely monitor the boundaries of the formation and take positions according to the breakout direction. There are typically several technical indicators that can help determine the direction of the breakout in such patterns. For example, volume analysis is a useful tool for anticipating breakout direction. If there is a noticeable increase in volume toward the end of the pattern, especially if this rise in volume coincides with a move toward the upper resistance line, it may indicate a bullish breakout. Additionally, momentum indicators like RSI showing positive divergence, where the price makes lower lows but the RSI makes higher lows, can be strong signals that the falling wedge is likely to break to the upside. However, no technical structure is absolute. In some cases, contrary to expectations, a falling wedge pattern can break downward. This usually happens due to sudden news flow or macroeconomic developments. If the price breaks below the lower support line with strong volume and closes below it, the downtrend may continue. For this reason, investors are advised not to rely solely on the pattern itself, but to observe the breakout direction clearly before taking strategic positions. The market consolidating within such a narrow range is a test of patience for many investors. As the price continues to move within the same range, investors hesitate to open positions. However, the real opportunities arise in these consolidation structures, as the price movement during the breakout can often mark the beginning of a significant trend. This is why structures like falling wedges are considered high-potential patterns in technical analysis, and experienced traders wait patiently to catch these moments. In the current scenario, it is observed that the pattern is nearing its end and the price is at a decision point. If the price breaks out to the upside from this wedge, the first target is typically the peak at the beginning of the pattern. Upon reaching this target, investors may take profits or conduct further analysis to determine if the price can continue to higher levels. However, if the breakout occurs to the downside, the pattern is considered invalid, and investors should quickly activate their stop-loss levels to limit risk. Moreover, the falling wedge pattern is not only a technical structure, but also a psychological transition phase. As the price tightens, investors are left in uncertainty. However, once that uncertainty resolves, the market channels all its energy in that direction. Especially after a downtrend, these structures often lead investors to believe that this could be the bottom. With that mindset, if the formation breaks to the upside, it is typically followed by high-volume buying and a stronger upward movement. In short, the falling wedge pattern is a very strong structure in technical analysis. The increasingly tight price movement within this pattern will soon choose a direction, and this directional move is likely to be powerful. The current technical setup clearly indicates that the market is at a decision threshold. It is critical for investors to observe this process with patience, confirm the breakout direction with technical indicators, and plan their positions accordingly for success.
RSI, one of the most frequently used and most reliable momentum indicators in the world of technical analysis, is a powerful tool that helps market participants gauge the strength of a prevailing trend. The RSI compares price changes over a specific period and acts as an oscillator that shows whether the price is in an overbought or oversold condition. This indicator typically interprets readings above 70 as overbought and readings below 30 as oversold. However, RSI is not only analyzed through these classic boundaries, but also provides valuable clues about potential market reversals when its internal trend structures are taken into account. In recent chart analyses, it has been observed that a bullish trend structure has formed in the RSI indicator over a period of time. This structure reveals that RSI values have been forming higher lows and higher highs, establishing an upward trend line. These types of patterns indicate that momentum is strengthening and that buyers are becoming more dominant in the market. At the same time, this structure serves as important support for the continuation of a bullish trend in the market. Rising trend lines within RSI often confirm the upward direction of price movement. However, in light of recent developments, it has been observed that this rising trend line in the RSI has been broken, indicating a technical deterioration suggesting that momentum is no longer as strong as before. RSI has moved below this ascending trend line, producing signals that potential weakening may have begun. This is a critical development for technical analysts and should be closely monitored, as a breakdown in momentum could mean that the price may also begin to weaken and that a potential wave of selling could emerge. Breaks of trend lines in the RSI can often be leading indicators of declines that have not yet appeared on the price chart. In other words, RSI acts like a guide that whispers upcoming changes in price before they happen. Even if the price is still moving sideways or slightly upward, trendline breaks in the RSI often indicate that hidden weakness has begun, and that this weakness will soon be reflected in the price chart as well. Therefore, the RSI breaking below its rising trendline is a strong indication that investors should start exercising caution. Currently, the RSI has fallen below this trend line, which had previously acted as support multiple times. This is not only a technical breakdown, but also a psychological shift in the market. Falling below this line shows that buyers are losing strength and that sellers are gradually becoming more dominant. At this point, whether RSI can rise back above this trend line is of great importance. If RSI moves back toward this broken trend line but fails to break above it, this is considered a breakdown confirmation in technical analysis and is usually seen as a strong bearish signal. A common scenario following such structures in the markets is as follows. RSI returns to the broken trend line, encounters resistance there, and then turns downward again. This scenario leads to confirmation of a developing downtrend in the RSI. RSI needs to rise back above the trend line.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.